Since last week, in fact, CNBC TV18 Remember reported on Friday about a clarification from the Central Board of Direct Taxes or CBDT that has fueled tax fears among several foreign portfolio investors. So when will a foreign investor be taxed? Well, if he invests 5% in a fund which owns 50% of its assets in India, the fund will deduct capital gains tax when the money is redeemed. Now, the foreign investor will face a 40% short-term capital gains tax and a 20% long-term capital gains tax as well. So this basically could impact most private equity funds in the country and India dedicated funds. So here are some tax experts who spoke to CNBC TV18 through the day on what the government could do and how it could impact inflows coming into the country.
The government thinking is that they want to increase the securities transaction tax because it's a tax across board and therefore hits even the very, very small investors. So what I am seeing really in the forthcoming budget is a bit of rationalization of taxes. Remember that the government has constituted a committee under the chairmanship of Justice Ishwar. The recommendations of that committee are expected over the next couple of days, and those recommendations will weigh in very, very heavily as the finance minister goes to present his budget this year. So I see a far more rigorous implementation of general anti-avoidance regulations. Remember that the government had promised to come out with rules on GAR, and those rules have not yet come in. I do expect a reduction in the rate of tax. I think there has been a categorical assurance, as I mentioned, by the finance minister on the floor of the parliament to say that yes, by 18 he's going to. So remember, most of the concessions are going away from this year, and these have to be accompanied by a reduction. As to whether that reduction in the rate will be 2%, 3% or slightly more is something which I do not know, but I would certainly continue to expect a reduction in the rate of tax.
There aren't so many different taxes that can apply to the capital markets. There's a securities transaction tax. I don't know whether they want to increase that. I don't know whether they want to increase the tax and balance the tax on dividends. But that, to me, I mean, for that to find a way into the Prime Minister's speech sounds really not so material if it's only a small percentage, small movement in taxes that will apply.
There was a reference which was worrying in the Prime Minister's speech. So one possibility could be the dividend tax, which is 10% currently, in addition to the DDT. I don't know whether there is any move to equalize, because remember, if there is a DDT of 22% and the tax over 10 lakhs is 10%, it is still a few percentage lower than the maximum. The difference is not much, but there could be a possibility of that.
And on